Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we are covering the topic of IND AS 1 presentation of financial statement. This is the part 2 of this standard. In part 1, we have covered the objective of IND AS 1, scope of AS 1, IND AS 1, definitions, and the purpose of financial statements and the complete set of financial statements. In this part, we will cover number 1, the general features of financial statement, which will be presentation of true and fair view and compliances with IND AS, going concern, accrual basis of accounting, offsetting, frequency of reporting, comparative information, consistency of presentation, and point B is structure and components. Next is balance sheet. These all are the points which are covered by us in this video. Now we are now we will start. Number 1 is general features of financial statements. What is the general features of financial statements? Number 1 is presentation of true and fair view and the compliance with the IND AS. The financial statement of any organization shall present a true or fair view in the respect of its financial position and its financial performance and the cash flow of the entities. Is that the financial statement of any organization present a true and fair view in the respect of financial position, financial performance, and the cash flow of any organization, so that the user of the financial statement can know about the position of entities or position of such particular enterprises. Presentation of true and fair view requires the faithful representation of the effects on transaction, other events, and the condition in the accordance with the definitions and recognition criteria for the assets, liabilities, income, expenses which are set out the framework. Is that when there is any organization which want to present a true and fair view of any financial statement, then there is the requirement to represent faithfully represent all the effect of transactions, all events, and all the conditions, and such representation shall be made in the accordance with the definitions and in the accordance with recognition criteria for the assets, liabilities, income, and the expenditures. Is that all the items, all the transactions, or and all the events, whether related to assets, liabilities, income, and the expenditure, should be disclosed or represented faithfully so that the financial statement can present a true and fair view. Point 3 is the application of IND AS with additional disclosure when necessary is presumed to result in the financial statement that present the true and fair view. Is that when there is any additional disclosure which is necessary, then such disclosure shall be made, and it should be made in such a manner that present a true and fair view of the financial statements. An entity whose financial statement comply with IND AS shall make a explicit and unreserved statement of such compliances in a note. Is that when there is any organization which is preparing the financial statement, then the then such organization will prepare a notes in the respect of all the accounting or IND AS which are used by such organization for the preparation and the presentation of such financial statement. Is that the entity shall prepare a unreserved or explicit statement of such compliances in the notes. An entity shall not describe financial statement as comply with IND AS unless they comply with all the requirement of IND AS. Is that an entity shall not describe the financial statement as complying with IND AS unless they comply with all the requirement of IND AS. An entity cannot rectify inappropriate accounting policy either by disclosure of accounting policy which is used or by the note or by the explanatory material. Is that a entity cannot rectify any inappropriate accounting policy only by the way of disclosure of accounting policy or by the way of note or by the way of explanatory material. Is that when there is any organization or enterprises want to rectify any inappropriate accounting policy, then there is a procedure which is to be followed by such organization. Is that only either by disclosure of such changes is not sufficient. If in the in there are certain rare circumstances in which management conclude that compliances with a requirement in a IND AS would be so misleading that it would conflict with the objective of financial statement set out in the framework, then the entity shall depart from such requirement in the manner which is set out in paragraph 8, which is given below. If the relevant regulatory framework require or otherwise does not prohibit such a departure. Point 8 explain the manner which are number 1 when number 8 is when an entity depart from a requirement of an IND AS in the accordance with paragraph 7, then it shall disclose number 1. Number 1 is that management has concluded that the financial statement present a true and fair view of the entity's financial position, financial performance, and the cash flow. Is that when there is any organization which depart from the requirement of IND AS in the accordance with paragraph 7, then such organization will represent or that the management head has concluded that the financial statement are present the true and fair view and they are presenting entity's financial position, financial performance, and proper cash flow in the proper manner. Number 2 is that is has complied with applicable IND AS. Is that the organization is properly comply all the applicable IND AS except that it is departed from the particular requirements to the present a true and fair view. Point 3 is the title of IND AS from which the entity has departed, the nature of the departure, including the treatment that the IND AS would require, and the reason why that treatment would be misleading in the circumstances that it would conflict with the objective of financial statement set out in the framework, and the treatment which is adopted will also be disclosed, and for each period presented the financial effect of the departure on each item in the financial statement that would have been reported in complying with the requirement is that all these points are required to be disclosed properly and in a sufficient manner in the case when the entity depart from the requirement of an IND AS with paragraph 7. Point 9 is when an entity has departed from a requirement of any IND AS in the prior period and that departure affect the amount which is recognized in the financial statement for the current period is that when there is any organization which has departed from the requirement of any IND AS in the previous periods or in prior periods, but the effect of such departure in the amount recognized in the financial statement in the current period, then it shall make a disclosure set out in paragraph 8 C and D. Is that on that the organization disclose will make a disclosure which is set out in paragraph C and D of paragraph 8. Paragraph C and D is number 1 is the title of IND AS from which the entity has departed, the nature of such departure, and the treatment of such IND AS, the reason why that treatment would be misleading in the circumstances that is conflict with the objective of the financial statement and the treatment which is adopted, and it will also disclose point D for each period which is presented the financial effect of the departure on the each item in the financial statement that would have been reported in complying with the requirement. Presentation of true and fair view and compliance with IND AS of the financial position, of the financial performance, and of the cash flow of entities is that there should be a presentation of true and fair view of financial position, financial performance, and financial or cash flow of the entity. Present a true and fair view require an entity to select and apply accounting policy as per IND AS 8. For the purpose of present a true and fair view, the entity shall or the entity requires to select and apply accounting policies as per IND AS 8. To present the information in such a manner that provide relevant, reliable, comparative and understandable information, and to provide additional disclosure if it is required to users to understand the impact of particular items. Going concern. Point 2 is going concern. When preparing the financial statement, the management make an assessment of an entity's ability to continue as a going concern. Is that when there is any organization preparing the financial statement of the organization, then the management of such organization assess the company's or the entity's ability to continue as a going concern, because in the case of any organization the going concern is a very important part. An entity shall prepare their financial statement on the basis of going concern unless management unless management either intended to liquidate the entity or cease trading or has no realistic alternative but to do so. is that each and every entity shall prepare their financial statement on the basis of going concern if there is no any expectation in the respect of liquidation of entity or ceases of training or has no realistic alternative to do so. When the management is aware in making its assessment of any material uncertainty which is related to the events and the condition that may cast significant doubt about the entity's ability to continue as a going concern, then the entity shall disclose such uncertainty. Instead, at the time or at the time of assessment, when the management found any material uncertainty which is related to the events or the condition that may have significant doubt about the entity's ability to continue the going concern concept, then in this respect, the entity shall properly disclose such uncertainty in the financial statement. When the entity does not prepare its financial statement on the basis of going concern, then it should be disclosed by the organization in its statement. Instead, a proper disclosure shall be made in the respect of non-compliances of going concern concept together with the basis on which it prepared the financial statement, and it is also explain the reason why the entity is not regarded as going concern is that on the basis of this we can say that the going concern is a concept in which the financial statement are prepared by the organization on for a undefined period. Where there is any organization not prepare their financial statement on the basis of going concern, then there is a requirement to disclose the reason of non-compliances of going concern, and there is also the requirement to disclose the basis on which this accounting on the basis of such financial statements are prepared. Accrual basis of accounting. Accrual basis of accounting is the another point of financial statement, presentation of financial statement. What is the meaning of accrual basis of accounting? And an entity shall prepare its financial statement except for the cash information using the accrual basis of accounting. Normally, all the organization will prepare their financial statement on the basis of accrual, but the provision of accrual is not applicable in the case of cash flow information. When the accrual basis of accounting is used, then the organization recognize the items as assets, liabilities, income, and the expenses when they satisfy the definition and recognition criteria for those elements in the framework. Is that on the basis of accrual, the entity shall the entity recognize the item as assets, liabilities, income, and the expenditures when they satisfy the definition and the criteria and recognition criteria. What is the meaning of materiality and aggregation? An entity shall present separately each material class of similar item. Is that in case when there is any material class of item, then the entity will separately present it separately. An entity shall present separately item of a dissimilar nature or function unless they are immaterial. Is that when there are in case when there are certain items which are immaterial in nature, then the entity shall also present separately item of a dissimilar nature or function unless they are immaterial. Offsetting. What is the meaning of offsetting? An entity shall not offset assets and liabilities or income and expenditure unless it is required or permitted by the IND AS. Is that when it is required or permitted by the IND AS, then the entity can offset the amount of assets and liabilities or income and expenses. An entity reports separately both assets and liabilities and the income and expenses. Is that the income, expenses, and assets and liabilities are reported separately. Offsetting is the statement of profit and loss account or balance sheet. Offsetting in the statement of profit and loss account or the balance sheet, except when offsetting reflect the substance of transaction or other events. Detract, detracts from the ability of users both to understand the transactions, other events, and the condition that have occurred and to assess the entity's future cash flow. What is the meaning of reporting? Frequency of reporting. Frequency of reporting. An entity shall present a complete set of financial statement at least annually. Is that the financial statement of any organization are presented annually. When an entity change the when an entity changes the end of its reporting period and present financial statement for a period which is longer or shorter than one period, then the entity shall, in case when there is any change in the reporting period of any organization and such organization present the financial statement for a period which is longer or shorter than 1 year, then the entity shall disclose, in addition to the period covered by the financial statement, number one, the reason for using a long, longer or shorter period, and the fact that amount which is presented in the financial statement are not entirely comparable. These facts are required to be disclosed if the reporting period is differ from the normal period. Comparative information are presented in such manner. Comparative information. What is the meaning of comparative information? Minimum comparative information. Except when IND AS permit or require otherwise, an entity shall present comparative information in the respect of preceding periods for all amount which is reported in the current period's financial statements. Is that when there is an IND AS which is permit or require otherwise, then the entity shall prepare or present comparative information in the respect of the preceding period for all the amount which is reported in current year's financial statements. An entity shall include comparative information for narrative and descriptive information informations if it is relevant to understand the current period's financial statement. The entity will also include all the comparative information which all are relevant, or if these are relevant for understanding the current position of the financial statement of any organization. An entity shall present as a minimum two balance sheet Each entity, an entity will present minimum two balance sheet, two statement of profit and loss account, and two statement of cash flows, and two statement of change in equity and other related note. Changes in accounting policy, retrospective restatement or reclassification. An entity shall present a third balance sheet as at the beginning of the preceding period in addition to the minimum comparative financial statement required if is that a entity will prepare or present a third balance sheet as at the beginning of preceding period in addition to the minimum comparative financial statement if it apply an accounting policy retrospectively. When the entity apply an accounting policy retrospectively and make a retrospective restatement of the items in its financial statement, or the entity reclassify the items in its financial statement, is that when there is an entity which is apply an accounting policy retrospectively, make a retrospective restatement of items in financial statement, or reclassification of the items in financial statement, then the entity will prepare third balance sheet. And the retrospective restatement or reclassification has a material effect on the information in the balance sheet at the beginning of the proceeding period. Is that when there is any retrospective application or retrospective is restatement and reclassification has the material effect on the information of the balance sheet, then the enterprises will prepare a third balance sheet. In the circumstances which is described in our paragraph, an entity will prepare three balance sheet as at first balance sheet at the end of current period, second balance sheet at the end of preceding period, and third one is the beginning of preceding period. Is that if there is any organization which is preparing three balance sheets, then these balance sheets are prepared as at number one, the end of current period, number two, the end of preceding periods, and third one is the beginning of preceding period. If the entity change the presentation or classification of the item in its financial statement, it shall reclassify comparative amount unless reclassification is impracticable. When there is any entity which is reclassifying comparative amount, then it shall disclose. Is that when there is any reclassification of comparative, when the entity reclassify comparative amount, then the entity will disclose number one, the nature of such reclassification, the amount of each item or the class of item that are reclassified, and the reason of reclassification. Is that in the case of reclassification, the entity shall disclose the nature of reclassification, the amount of items which are reclassified, and the reason of reclassification. When it is impracticable to reclassify comparative amount, then the entity shall is said when it is impracticable to reclassifying the comparative amount, then the entity shall disclose the reason for not reclassification of amount. Is that the entity will disclose the reason for not reclassification of the amount, and the nature of the adjustments, the nature of the adjustment that would have been made if the amount has been reclassified, the nature of the adjustment that have been made if the amount had been reclassified. consistency of presentation is that an entity shall retain the consistency in the preparation, presentation, and the classification of the item in financial statement. Is that there should be the proper consistency in financial statement from one period to next period. Then point 1 is it is apparent following a significant changes in the nature of the entity's operation or a review of its financial statement that another presentation or classification would be more appropriate having regard to the criteria for the selection and application of accounting policy in IND AS 8 is that in the case of financial statement there should be the consistency and there should be a consistency year by year. In this respect, an entity shall retain the presentation classification of the item in the financial statement from year to year, from one year to next year, unless it is apparent following the significant changes which is in the nature of entity's operation or the review of its financial statement that another presentation or reclassification has more appropriate and more appropriate regard to the criteria for the selection and the application of accounting policies. Next one is an IND AS require a change in presentation. Is that if it is required by accounting standard, if it is required by IND AS, or if due to such changes it is present more appropriate information, then we can change. But if these if there is no such type of condition, then the entity prepare their financial statement according to the basis of consistency, structure, and content. What is the structure and content of financial statement? Introduction. This standard requires particular disclosure in the balance sheet or in the statement of profit and loss account or in the statement of changes in equity and requires disclosure of other line items either in those statement or notes to accounts. Is that this standard require the disclosure in the balance sheet or in the statement of profit and loss account or in the statement of change in equity and require the disclosure of other lines item either in those statement or items or notes. In day 7, statement of cash flow set out the requirement for the preparation and the presentation of cash flow statement or cash flow information. This standard sometimes use the term disclosure in broad sense in encompassing item presented in financial statement. Disclosure are also required by other accounting standard, other IND AS. Identification of the financial statement. Identification of the financial statement include name of the reporting entity, whether a single entity or a group entity, date at which the date at the end of reporting period or the period which is covered, presentation currency which is used, and label of rounding. Is that an entity shall clearly identify the financial statement and distinguish them from other information in the same published document. An entity shall clearly identify its financial statement and distinguish and separate it from other informations. An entity shall clearly identify each financial statement and notes In addition, the entity shall display the following information in its financial statement, which are understandable. These informations are: number one, name of reporting entity and other means of identification, and any changes in that information from the end of the preceding reporting period. Is that the entity will disclose the name of reporting entity, and if there is any change that if there is any change which is made from the end of preceding reporting period, then it should also be disclosed. They will disclose whether the financial statement are of an individual entity or a group entity, whether the financial statement are of a individual entity or a group entity. Next is the date of the end of reporting period. They will disclose the date of reporting period and the period which is covered by such financial statements. Fourth point is the presentation currency, is that in which currency the financial statements are presented by the entity, and the label of rounding which is used by the entity for the preparation and for presenting the amount in financial statements. The following point and the following information will be disclosed. Balance sheet. What is the meaning of balance sheet and what is the content of the balance sheet? Information to be presented in balance sheet. What are the information which are included in the balance sheet? The balance sheet shall include line item that present the following amount. Is that the balance sheet includes the following items. Number one, property, plant and equipments. Number two is investment properties. Number three is intangible assets. Number four is financial assets. Number five is investments. Number six is biological assets. Number seven, inventories. Number eight, trade and other receivables. Next is cash and cash equivalent. Next, the total of assets which is classified as held for sale. Next, trade and trade payables, trade and other payables. Next is provisions, financial liabilities, liability and assets for current tax, deferred tax assets and deferred tax liabilities. Liabilities which is included in disposal group, classified as held for sale, non-controlling interest, issued capital, reserves which is attributable to the owner of the parent. These all are the items which are to be included by the entity in its financial statement, in its balance sheet. Is that the balance sheet includes fixed assets just like plant and machinery, furnitures, building, land, intangible assets just like goodwill, patent, copyright, franchisee, deferred tax assets, deferred tax liability, trade loans, borrowings, investments, financial instruments, non-controlling items, financial liabilities, bank overdraft, bank balance, cash and cash equivalent, and there are many other items which are included in the balance sheet. An entity shall present additional line item, heading, and subtotal in the balance sheet when such presentation is relevant to an understanding of the entity's financial state. Is that when there is a requirement to present any additional line item, heading, or subtotal in the balance sheet, when it is required when such presentation is relevant to understanding the entity's financial position. When an entity present current and non-current assets or current and non-current liabilities, a separate classification in the balance sheet, it shall not classify deferred tax assets as current assets. Is that in the balance sheet, the entity will present Deferred tax, the entity will present current assets, current liabilities, and non-current assets and non-current liabilities separately. But the deferred tax assets and the deferred tax liabilities are not to be classified as as current assets or current liabilities. They are is that the deferred tax assets and deferred tax liabilities show separately in the balance sheet. The entity makes a judgment about whether to present additional items separately on the basis of assessment. The entity make the judgment about whether to present the additional item separately on the basis of assessment. For the nature and liquidity of assets, the function of assets within the entity, and the amount and the nature and the timing of such liabilities. The use of different measurement bases for the different class of assets suggests that their nature and function differ are. Therefore, that an entity present them as separate line. Is that the use of the different measurement bases for the different class of assets, which is to be determined on the basis of their nature and the function. Then the entity present it separately. For example, different classes of plant and machinery can be carried on cost or revaluate amount, and it will be determined in the accordance with IND AS 60. Current and non-current distinction is that current assets and non-current assets, current or non-current differences. An entity shall present current and non-current assets and current and non-current liabilities as separate in the balance sheet. Is that all the current and non-current assets and liabilities are shown separately or classified separately in the financial statement, except when a presentation based on liquidity provides information that is reliable or more relevant. Is that if when there a presentation which is based on liquidity and it is provide the information that is more reliable and more relevant, then there is no need to classify separately. But in normal cases, the entity shall present current and non-current assets and liabilities separately in its balance sheet. When that expectation apply, the entity shall present all the assets and liabilities in the proper manner. Is that in case if there is any liquidity, then the entity shall present all assets and all liabilities in the order of liquidity. Whichever method of presentation is adopted, an entity shall disclose the amount which is expected to be recovered or settled after more than 12 months for each assets or each liability line item that combines amount expected to be recovered or settled. Is that any of the method or presentation is adopted, but the entity shall disclose the amount which is expected to be recovered in the case of current, in the case of assets, or the amount which is settled in the case of liability after more than 12 months for each assets and for the each liabilities line item that combine the amount which is expected to be recovered or settled in the respect of not more than 12 months after the reporting period and more than 12 months after the reporting period. What is the meaning of current assets? Current assets include cash in hand, cash in bank, debtors, stocks, BR, investments, loans and advances, short term loans and advances, prepaid expenses, income earned but not received. An entity shall classify an assets as current assets when it expect it expects to realize the assets or intended to sell or consume it. Is that when there is any asset which is used which is held by the organization with the intention to sell or consume it in its normal operating cycle. And when it is held when it is held by the entity for the purpose of trading, when it is held by the organization for the purpose of trading, it expects to realize the assets within the period of 12 months after the reporting period. The assets is cash and cash equivalent. Is that a an asset is to be considered as a current asset when it is held by the organization for the purpose of sale or consume it in its normal operating cycle, or it is held for the purpose of trading, and it is expected to realize the assets within the period of 12 months, and such assets is include cash and cash equivalents. These assets are to be known as current assets. An entity shall classify all assets as current or non-current assets. Current assets which are satisfy the condition previous condition, then these assets are to be considered as current assets, and all other assets are to be known as non-current assets. This standard use the term non-current to include tangible, intangible, and financial assets of a long-term nature. Is that the assets which are tangible, intangible, and the assets, financial assets, which are and the financial assets which is having long-term life or long-term nature are to be considered as long-term are to be considered as non-current assets. What is the meaning of current liabilities? Classify as liabilities, classifying as a current liabilities when it is expected to be settled by the organization in normal operating cycle. It expects to settle the liabilities in a normal operating cycle. It holds the liabilities primarily for the purpose of trading. Number three is the liability is due to be settled within the period of 12 months after the reporting period, and it does not have an unconditional right to defer settlement of the liabilities for at least 12 months after the recognized period. In this case, if these condition or any other condition is satisfied, then such liability is to be known as current liabilities. An entity shall classify all other liabilities as non-current. Other than current liabilities, all liabilities are to be considered as non-current liabilities. Some current liabilities, such as trade payables and some accrual for the employees and other reporting costs, are the part of working capital, which is used in the entity's normal operating cycle. An entity classifies such operating item as current liabilities even if they are due to settle more than 12 months after the reporting period. Is that there are certain operating items which is are to be classified as current liabilities if they are settled more for the period of more than 12 months. The same normal operating cycle apply to classification of an entity's assessment and liabilities. An entity classify its financial liabilities as current when they are due to be settled within 12 months after the reporting period if the original term was for a period longer than 12 months. Is that if the financial liabilities as a current, a financial liability will be classified as a current when they are due to be settled within the period of 12 months after the reporting period, even if the original term of such a liability, if the original term of such liability was for a period which is longer than 12 months, and agreement of reference or to reschedule payment on the long term basis is completed after the reporting period and before the financial statement are approved for the issues. For the issue. information to be presented either in balance sheet or in its notes. Now we will discuss the information which are presented in their balance sheet or in notes to accounts. An entity shall disclose either in the balance sheet or in notes further subclassification of line item which is presented classification plus presented classified in the manner which is appropriate to the entity's operation. The entity shall disclose the following either in the balance sheet or in the statement of changes in equity or in notes in the respect of class of share capital for each class of share capital. Number one, the number of share authorized is that authorized shares. Number two is the number of share which is issued and fully paid and issued but not fully paid is that the organization in the respect of share capital will disclose the number of authorized share and the number of shares which are issued and fully paid and the shares which are issued but not fully paid par value per share or that the share have not par value. A reconciliation of the number of shares which are outstanding at the beginning of the period or at the end of the period. They will also present a reconciliation in the respect of number of shares which will represent outstanding number of shares at the beginning of the period and the number of shares which are outstanding at the end of the period. They will also disclose the right, preference and the restriction which is attaching to that class, including restriction on the distribution of dividend and the repayment of capital. They will also disclose share in the entity which is held by the entity or by its subsidiary or by the associate. And they will also explain or disclose the share which is reserved for issue under option or contract for the sale of shares, including terms and amounts. And it is and they will also include a description of the nature and the purpose of each reserve within equity. Is that all these disclosures are to be made for the share capital. When there is any organization whose capital is not limited by the share, is that if it is limited by guarantee, then the following disclosure, then the disclosure information equivalent to that required by the above paragraph A, showing the changes during the period in which category of equity interest and the rights, preference and restrictions attaching to each category of equity interest. If an entity has reclassified, then a portable, portable financial instrument classified as an reporting as an equity instrument or an instrument that impose on the on the entity an obligation to deliver to another party a pro rata basis of the pro rata share of the net assets of the entity only on the liquidation and in classification or in only on the liquidation and is classified as the equity instrument is that the entity if there is any entity which has classified a portable instrument as the equity instrument and the and and the instrument which impose an obligation to the entity to deliver to another party a pro rata share of net assets of the entity only on the liquidation and it is classified as equity instrument. Between the financial liabilities and equity, it shall also disclose the amount which is reclassified into and out of each category. And it will also disclose the timing and the reason of such classification, such reclassification. This is our accounting standard 1. This is part 2 of IND AS 1. There are some other points in IND AS 1 which are covered by us in part 3 of IND AS 1. For the proper and full understanding of IND AS 1, kindly refer our next video, IND AS 1 part 3. Thank you so much.